edge and competing with the best, a clutch of Indian companies have proven that the world is indeed their stage. This season, Inside India's best-known companies takes you on a journey to discover how some of the brightest in India Inc. are charting an exciting new journey across the world and driving game-changing innovation from the front. We take you inside India's most global and innovative companies. This season on Inside India's best-known companies.
Presented by Accenture, high performance delivered.
This is a special edition of Political Capital.
India's story is not over. Government should not be in the service sector.
Do you think this is going to be an economy election?
Mr. Modi wave will sweep the country and you'll see
it is something extraordinary, never seen
Those
before.
who police are not
real challenge is to break the threshold of viability.
Depth of defeat in two states surprised.
यह फिगर 272 से ऊपर की भी हो सकती है.
Each Lok Sabha constituency is a contest in its own right.
The will to rule is gone. He needs niti, that is policies, and not neta.
The rural economy is doing much better.
BJP should strive for absolute majority.
Alright, welcome back. You're watching Street Smart on Bloomberg TV India. Just a quick mention as far as the SGX Nifty is concerned this morning. 15 to 16 points high. A little slow today, 0.2% gain coming in, but the trajectory is still pretty much on the positive side. So what's the strategy? What's the outlook as far as markets are concerned? Ajay Bodke, head for investment strategy and advisory at Prabhudas Lilladher, is joining in this morning. Ajay, thanks for taking the time out. It's been a good session as far as the markets are concerned, rather good last couple of sessions in terms of kind of run-up that the markets have seen. What's it looking like from here, Ajay? What's the strategy at these kind of levels?
I think the markets, as you rightly said, have run up quite a bit over the last few weeks, primarily based on the massive FI flows that one has seen from the 1st of Jan. Also, the rupee has been extraordinarily strong on the back of roughly $6 billion of money that has flown in from 1st of January. And I believe out of that, roughly $2 billion has flown in over the last couple of weeks on the FI debt side. On the equities, the flows also have been equally strong, with roughly around $1 billion coming in the equities, out of which roughly $500 million came in over the last couple of weeks. So in the face of such massive FI flows, I think the market, both the rupee and the equity markets, have been showing extraordinary strength. And hence, a lot of sectors like capital goods have seen a massive up move. Some of the front-end capital goods names like Crompton Greaves, Voltas, Siemens, or even Larsen & Toubro have seen between 25 to 35% up move. Again, based on hope that a stable coalition, a stable government would come to power post 16th of May, which would help in reviving the moribund investment cycle, which will put in place policies that will encourage the flagging growth in industrial sector, especially with the focus area for growth. And I think the overall insipid climate which has enveloped the economy over the last 2 or 3 weeks, they will be able to reverse that. So I think I would term this rally as a combination of the hope rally based on a decisive mandate to be returned by the Indian electorate, as well as foreign inflows which are coming in spades, also because of the improvement in the macroeconomic parameters, and more particularly the trade deficit in the current account deficit, whereas we were counted as one of the fragile 5 last time around. I think this time around, because of some deft work done by the RBI governor in terms of attracting $34 billion of long-term money through concessional swap, the rupee, he has been able to stabilize the external sector, and any worries on a wobbling of the currency has been put paid by those policies, which primarily has been the turning point for the Indian economy in my view. the stability on the external front, appreciating rupee, hence concerns abating on imported inflation, concerns abating on under-recoveries coming down, and hence fisc getting some sort of a breather. So I think that has been primarily the reason why India has outperformed.
Fair. Ajay, just hold that thought. We're going to take a quick break right now, but when we come back, we're going to discuss stocks like TCS, which are pretty much going to be in focus today, and Maruti. Also remember, stock had seen almost an 8% run up yesterday. We get you some more perspective with Ajay on that in just a minute. Stay tuned.
If we want to kickstart further investments in the power sector, new projects to be planned, the first thing that should be done is that coal linkages will have to be thought about.
CIL has capability to increase its production by 290 million tons per annum had there been coal logistic solution. So once that is sorted out, we will have surplus coal in India.
In association with Jindal Power, NTPC, REC, and Power Grid.
Welcome back. We're in conversation with Ajay Bodke. Ajay, let me just also get your views on the IT pack. TCS also hinting at a muted Q4. Are you worried about the IT sector as a whole, even in the near term, or do you feel this is just more stock specific or seasonal? How are you viewing this piece of news?
I think if you were to look at the TCS guidance yesterday, they have said that one of the reasons why they're expecting operating margins to be softer, and when I say softer by 0.3%, they are still expecting to post 29.7% operating margins for the quarter. The reason attributed to them is, one of the reasons is seasonality in Europe, softness in the Middle East and APAC, as well as continued weakness from India. But if you juxtapose that vis-a-vis what they are saying for FY15, I think in terms of FY15, they are confident of a stronger FY15, and they are expecting a pickup in discretionary spend in FY15, as well as increased penetration in new geographies, services and verticals. So our internal view essentially is that although there could be some near-term softness, especially given the fact that some of these IT names have been outperformers over a 2 to 3 month period, certainly not over the last 15-20 days, but over a longer period, I think they have been outperformers. The fact that the rupee is acting as a headwind, showing extraordinary strength, as well as these company-specific issues. In case of NP also, we had sort of the management coming and guiding about softness in certain verticals. Now TCS following could lead to them being soft for for some time. But the longer-term story about an improving American economy, where the GDP is expected to grow at between 3.5% vis-a-vis 1.9% last calendar year, which is the largest market for this IT pack. The fact that NASSCOM has guided higher in the current year vis-a-vis last year. So I think power coming back to IT companies makes me very confident about having IT as core part of portfolio. So Infosys, Wipro, Tech Mahindra in large caps will remain part of our portfolio, and NIT Technologies in the mid cap space.
Sure. In fact, Ajay, basically what I can actually extrapolate from what you're saying out here is that after what we saw with that Infy crack just a couple of days back, after the kind of caution that the management had given, and today also if TCS was bound to actually go lower, IT still is a very much buy on dip strategy.
Certainly. I think, I would not, because the underlying fundamentals for all the markets where they cater to, i.e. America and Europe, clearly are on a mend. I think global growth is expected to be at 3.6% as per IMF, vis-a-vis 2.9% in last calendar year. And these are the biggest markets for them. So I think both in terms of the pricing power, in terms of expanding margins, we are betting on these companies in the current financial year.
Sure. All right, Ajay, just hold that thought. I want to get the pre-open codes going as well. Currency, remember, closed yesterday at 61.2. Towards the end, it had a little bit of weakness coming in, is what we've seen as far as the currency is concerned. So it's going to be pretty important to see how that one opens up in trade. But the pre-open, at least in terms of what we're seeing on the benchmark indices, is pretty flat, at least on open, just barely holding on to some gains as far as Sensex is concerned. Nifty just 17 to 18 points. I want to pull up TCS in pre-open for you as well. Infy's trading up by roughly around 0.1%. TCS taking a little bit of a knock, 2% lower is what we're seeing on that counter. Remember, we've been talking about these downgrades coming in, a little bit of the analysts getting some jitters, but the overall guidance is still maintained in terms of FY14. It's just some kind of expectations, just getting a little muted in terms of Q4 itself. And as Ajay was also saying, it's more of a seasonality factor when we talk about TCS. But the markets overall, barely holding on to some gains. The currencies open at roughly around 61.07 is what we're seeing in terms of the currencies. So pretty flat in terms of the way the rupees open. Let's get some quick perspective on that. K. Hari, head of Treasury at First Hand Banks, joining in right now. Hari, thanks for taking this call. Your thoughts on the currency?
I think, as you mentioned, it's kind of a flat opening. Internationally, we've had some issues both on the Crimea side as well as on the China side. But I think the market seems to have brushed them a little bit aside. More in a kind of happy space, taking cues more from the fact that the dollar index has actually started coming down. And also the fact that the Brent and the crude indexes are all looking soft. So I think overall the cue seems to be more flat from an international sense. And locally, the rupee is taking a lot of comfort from the fact that the FI inflow into India continues to be very strong. This month, we've seen about 18,000 crores in. So I think going forward, inflows are going to continue. But below 61, there are serious bits. So I would expect that the rupee should be in a small, narrow range of about 60.90, 61.30.
In terms of the bond markets as well, any updates as far as what the outlook looks like there?
On the bond market, I think from a supply point of view, we all know the supply has almost gone off. Yesterday's buyback, 15,000 crores that was there, we had close to about 11,000 crores being taken by the Reserve Bank. The bids look very good in that sense. The bigger factor in the bond market seems to be the liquidity. Banks have already started drawing from the MSF window. We saw 20,000 crores going out in the first round itself yesterday. So going into the year end, we'll see liquidity tightening as a part of the market, despite the fact that there was a 10,000 crore repo auction announced yesterday. So that money should come in today. But remember, we are going to see the tax flow staying out and probably keeping out. And there's a small PSU ETF that's happening. That's, again, 3,000 crores of money going out of the market. So liquidity may remain tight, but post-April, I think some of it, a large part of it could come back. So yields are going to hold steady at about 8.80 levels. And more, we'll wait for 28 when we'll see the calendar for the year coming out. And if, as per the market expectations, we see about 60-65% of the bond coming in the front part, then you could see a little bit of tightness coming back in the market, and therefore yields looking a little bit bearish.
All right, Hari, we'll leave it there. Thanks so much for joining in this morning and getting us that perspective as far as the currency and the bond market outlook is concerned. But Abba, that's what we've got right now, the pre-open. It's a little muted in terms of kind of cues that we're picking up, but currency hovering around 61.09.
All right, Ajay, let's also get back to some stocks that we're watching out for going ahead. Maruti yesterday, of course, was up 7-8%. That was a big stock of the day. What's your view on Maruti going ahead?
I think we've had a fair amount of run in Maruti on the hope that the concerns that were raised by the institutional investors are getting addressed from the management's perspective, albeit after a lot of pressure that was put on them by the institutional investors. So I think the stock has more or less discounted those positives, and I would be a worry jumping in at the current levels. I would rather be buyer on dips in case of Maruti. In the auto sector, our bets would still remain with Hero Motors. I think we expect that the rural buoyancy will continue to get reflected in the numbers in Hero Motors. So there we are expecting around 15% upside over a medium-term perspective. And in the allied sector, auto ancillaries, our bets would remain with Motherson Sumi. Stock has done well, but our analyst is expecting the stock to do better as we go forward because of the turnaround in their subsidiaries in Europe. And on the domestic front in auto ancillaries, Apollo Tyres is a stock that is preferred by us.
Actually, the other big sector, that's the banking pack. Now, the kind of run-up that we've seen in this sector has really surprised everybody. And, as you spoke earlier also, the kind of hope rally and the kind of build-up to this entire election event, banking has been one of the single most important sector that's really led the charge. But looking at the way the run-ups now panned out, Ajay, what's the outlook when we talk about the banking sector out here? Are you still taking any kind of positioning? Are you advising clients to probably look at the banking pack? And if so, which side would it be, the public sector banks or the private space?
I think in addition to capital goods sector, if there's one sector that one would zero in that has been responsible for the massive or the ferocious flare-up in the Indian markets, it is the banking in general and private sector banking in particular, where one has seen some of the high beta names in the private sector banks like Axis Bank and ICICI Bank going up by more than 25 to 30% in the last 4 or 5 weeks. And even banks like HDFC Bank have seen sort of 16-17% up move. Yes Bank has seen around 25-30% up move. So I sort of would be very worried jumping into these names right away. I would wait and buy them on dips. And these banks again have moved up essentially based on the fact that a stronger government should should come to power post May 16th. And as the economy gets moving, I think some of the problems on the NPA fronts, which anyway I think these banks have comparatively lesser problem as compared to PSU banks. The fact that PSU banks have been lagging essentially is because the problems on the NPA and restructured asset fronts are far more severe there. And it would take a quarter or two, even if the economy picks up, for them to come to grips with those problems. So the early birds, I think, have been the private sector banks. I would look at some of the stronger public sector banks, but I would still wait out for dips to get into these banks. Our preference there remains on dips, and that's important, on dips, ICICI Bank and Axis Bank. HDFC Bank, I think even today, in my view, offers very good value in medium-term perspective, especially with the expectation that an FIPB approval, if it comes through after Law Ministry's approval for increase in FII holding, one could see a jump. We are expecting a price of around 760 with a 12-month perspective in HDFC Bank. ING Vaishya is one bank, I think, which one could look at in the mid-cap space, where there has been some movement, but not as much. And as and when consolidation in the banking sector does happen, this is one of the prime banks that one could look at in terms of consolidation play. So there we are expecting in the medium term a price of around 625 with the medium term perspective.
Right, Ajay, what about ITC? The stock's gone up about 13% in the last month itself. It's really been one of those dark horses, despite the fact that no one seems to be looking at defenses at the moment. What's your call on ITC?
I think we continue to remain positive on ITC. The stock was an underperformer for an extended period of time. But I think we are expecting both, in fact, the other heavyweight that we are positive on is Reliance. And both ITC and Reliance have picked up the rally that one has seen in the last a few days especially. ITC and Reliance have continued to remain strong. I think we would continue to bet on ITC and Reliance in the portfolio. ITC, we have a target price of 381 with a medium-term perspective. Reliance, we would advise buying on dips.
Ajay, very quickly then, top mid-cap picks in this kind of a market, anything beyond the index that's on your radar right now? Probably 3 stocks that you're tracking beyond the index?
Yeah, I think Motherson Sumi continues to remain a strong buy for us. The second mid-cap space is Pidilite and Britannia on the FMCG space. Pidilite, we're expecting a target price of around 320 from here. Britannia, we are expecting a target price of 1110 with a medium-term perspective. And I already discussed NIT Technologies and ING Vaishya Bank.
Sure. All right, Ajay, always a pleasure talking to you. Thanks so much for joining in today and getting us that perspective in terms of markets and a couple of stocks that you're looking to in terms of an investment strategy out there. All right, so that's a call coming in from PR with their top picks.